confirm, not major, but nonetheless, this is a support area, and I'll show you this. Okay? And then if you're thinking for next day confirmation, is it still holding support? So the setup might be there, a lot of turning signals, but if you're selling on this bearish engulfing pattern, you're selling at a support level. I'd rather have the market break the support, even a couple of pips, or certainly here. I don't care if that's a spinning top or not. It broke the support area. This is still probably an okay risk reward. But we should always think about if the market's at support or resistance at the time we get the signal, because if it is, you don't do the trade. Yes?
When you have a higher confidence of going short on the engulfing pattern, if you've had another resistance 2 or 3 months prior back to that?
The question is, when we have more confidence if going back on the chart here, this was confirming a resistance area? And the answer is yes, definitely. But I would still like to see a break of that support area. Here are a couple of engulfing patterns. And one thing we should think about is comparing the size of the real bodies. Ideally, what we want to see is the second real body much bigger than the first real body, to see that the opposing forces are taking control. A bullish engulfing pattern, we want to see the bulls, the opposing forces, the bulls taking control from the bears, bearish engulfing pattern, the opposite. So in the green rectangle, obviously, much larger black real body. That increased the likelihood of a turn. It also increased the likelihood it's going to be resistance. Unfortunately, what does it do for a risk reward? Makes it worse if you're selling it here, but there's nothing wrong for waiting. It may not get there, but anywhere near the prior resistance area to think about selling it. Here we have a couple, this is also a doji, but an engulfing pattern, but these are about the same size, and we're not getting a visual sense. Remember, the candles are very visual. You can flip through lots of charts. In the Forex market, we don't have that challenge. On the equity side, think about how many markets you have to flip through. In the Forex, have a couple of major crosses or pairs. So we don't have that challenge, but if you work during the day and you want to go through the Forex markets at night, you can flip through them very quickly and see the engulfing patterns. One of the things I would note is see if the real bodies are about the same size. If they are, there's not much of a difference between the bulls and the bears. Whether these happen to be intermediate size, you could have a small white real body, let's say a bearish engulfing pattern, a small white real body and a small black real body. Or you could have a really large, let's say a bullish engulfing pattern, a really large black real body and a really large white real body. If they're about the same size, that to me doesn't reflect a market likely to turn. In fact, if you have really big, very large real bodies, the Japanese say it's like an earthquake of magnitude 8. It goes up and down and up and down. So the green rectangle is the one I would be more confident of a market turning. Now, in the non-Forex, we normally want to see the first candle as a spinning top. But because the Forex, you can have a spinning top in one charting package and a doji in the other, this is perfectly acceptable. In other words, a doji wrapping around the real white real body following a doji, or black real body following a doji. Okay. And the reason for that has to do exactly with this. These are both the same days worth of data, different charting packages. One has a doji, one has a spinning top, and they're both, to me, bearish engulfing patterns. So this is a bullish engulfing pattern. Okay, this is another bullish engulfing pattern. And that second candle in the bullish engulfing pattern doesn't look quite like a hammer. Why would that not be a hammer on that second, that white candle? The body's too big, or you'd say the shadow's not long enough. The same thing, right? The lower shadow, what we want to see with a hammer is lower shadow at least twice the height of the real body. Mm-hmm.
On an engulfing pattern, is there any criteria on the shadow?
No.
Not an engulfing, a spinning top.
On a spinning top, no. The question is, on a spinning top, is there any criteria with a shadow? And the answer is no. The spinning top just means it's a small real body. That's all it is. Spinning top and small real body mean exactly the same. Now, if you have a spinning top or small real body, or a doji with a very long upper and lower shadow, you got a high wave candle. If you have a spinning top or a doji with a very long lower shadow coming after a downtrend, you have a hammer. If you have a doji or a spinning top coming after a rally with a very long upper shadow, you have a shooting star. Related to the bearish engulfing pattern is the dark cloud cover. Now, a bearish engulfing pattern wraps around the white candle, and in a non-4x dark cloud cover, what we want to see is the market gapping higher the next session, whether this is an intraday chart or a daily chart. By the way, somebody had mentioned intraday. You can have a gap higher opening. What will usually happen is the big moves in intraday will be between the last candle today and the first candle, the last candle yesterday and the first candle today. You could have something like this. So this could be on an intraday chart. This could be the closing here, and on the next day's opening, the market could gap higher on the opening. Okay, it's rare to have that within the same day on an intraday and a non-4x, but you could have moves like this on an intraday. But non-4x, equities, whatever, we want to see the market opening above, ideally above the prior close, or even better than that, above the prior high. Now, we don't know it's going to be a black real body until the end of the session. What do you think the bulls are feeling here on that opening? Happy or sad? Should I make a little happy face on here again? Sure, they're happy. The market gapped higher in the opening. And by the end of the session, the market closes more than halfway, and this is an important criterion, more than halfway into the white real body. For 4x, that criterion is still there. It has to close below the middle of the at the middle or below the middle of the white real body. 4x, not surprisingly, the opening and closing can be the same. The Japanese will say, with a dark cloud cover, it's a sign of uneasiness at a high price. And the higher the dark cloud cover should be resistance. Okay, so here, and at times I'll look at a weekly chart to get a longer term, if I see longer term support or resistance. Okay, each Friday for our institutional clients, I'll look at a weekly chart. Most of my focus is on a daily or 60 or 30-minute chart. And the reason we look at intraday will be evident later on when we focus on intraday charts, even though most of my clients are swing traders. But here we have a weekly chart, and it's the pound dollar, and classic dark cloud cover became a resistance area with another dark cloud cover. Just because you have two dark cloud covers doesn't mean that the market's going to fall like this. On this red circle here, what would get us nervous about the rally? Not nervous enough to be short, but what would get us nervous? Small bodies, yeah. Yeah, so the trend would be up, but I'd nudge it to neutral. I would not add to long positions there, and this is very valuable information. In the introduction, I had alluded to the fact it's just as important knowing what, maybe I didn't, but it's just important to know what not to do as to do. And knowing not to add to long positions there, very, very important, because we're able to preserve our trading capital. In fact, what I did is on this chart, on the pound here, weekly, I just changed, you'll see I changed the spelling a little bit. Here we have a dark cloud cover, and